7th, 2023. This is pre-market opened. CNBC.com, everything is slightly down this morning, just slightly less than 1%. So let's jump right into it. Looking across the headline, shift back to the past with interest rate. Yeah, yesterday the market was a little bearish, I would say, if anything, because of a good ISM manufacturing number. So that make traders, investors think, oh, the market is still doing well, and economy is doing way too well. They might raise more interest rate. So if interest rates goes up, cost of borrowing become more, so it can become more expensive. That's that. Nice. Okay, now the Dow was down to 200 yesterday, so you have a slight down day yesterday. It's a knee-jerk reaction. Who knows, right? But right now, what we're looking at, so it's all about interest rate. The market is really looking at interest rate because that affects the cost of borrowing, and which affect companies' capex or capital expenditures in that sense. So let's go right into something different today. Actually, I want to talk a little bit about fundamental analysis. It's fundamental analysis 101. At the end of the day, when you buy a stock, what do you own? You own a company. Why do you want to own a company or a piece of a company in actuality? That's because you want some of its potential profit. That after you pay off all his bills, his loan, his salary, cost of borrowing, and everything else, right? The workers, the CEOs, the bonus, how much the money make, how much money the company makes at the end of the day comes down to its cash flow. So the one-on-one is first thing I always look at actually is cash flow. Now, for example, AMZN is a quarterly, right? Back in 2013, first quarter, it's only making around 8 million total cash and short-term investment of asset. Right? So that's the asset it had, and you can see it's starting to climb over the years. 2015, 2 years later, it reached 15, 20. Right. And it fluctuates around, and then a couple more years later, 25, 24, fluctuates around there, and then it jumped to 36, 30, 40 over the years. So you can tell its cash flow is really on a linear curve, keep on increasing, and then now is around 60, 70. Within 10 years, it went from 7.8 to 70. At some point, it come off a little, but that's tenfold. This is why AMZN stock price is doing this over. Alright, keep going up over the years. Alright, 2015, let's compress that. Alright, you look at it. Back then, it's not even a $20 stock. Alright, at the hike, it's 180, more than tenfold, or close to tenfold. Alright, so yeah, so this is one of the reasons why it's doing so well. Of course, this is also the market. It came up from 70, hike, and then there's other reasons behind it. But at a glance, first I look at its cash flow. Cash is king, and you have all these liabilities too. And the question is, what about liability? Right, the money owns. Yes, it will increase 8.9. All the way to today, 669. So that has been increasing over the years too. Liability. Oh, that's account payable. Total liability. That's the number I look at. 168 right now. Back in the day, 8. Alright, so it went from 8.4 to 168. Wow. So what does that tell me? That tell me it's spending a lot of money over the years to expand and capture its clients, to expand into market. So you got to be aware of that. You got to be aware of kind of how much is they making, companies making, and what kind of debt liability is taking on. Because at the end of the day, the companies to liquidate, to close down. Right. Okay, asset minus liability is shareholder equity. Right. So after they pay off a loan, everything else, and then the stockholder is the last group to have claims to any leftover asset. Right? So, in that sense, yeah, so total cash, right, that's cash, total asset. Total assets, total cash, because they add up all that other stuff, 28 to 477. Yeah, so the asset keep on increasing. Right, so in that sense, total liability, total asset. Yeah, in that sense, if you look at it, 476. If Amazon is to liquidate today, stockholder will get literally nothing. Keep that in mind. Right. At a glance, you look at total asset minus total liability. Ooh. You're not gonna get anything back. Ooh, yeah, and that is most the case if if this company shut down. Most of the time, stockholder will be left holding the bag. Even the bondholders, right? Not necessarily they can recover the principal, and there's different tranches. Right? Senior debt, right? And the junior debt. Senior debt always get paid first. So, yeah, understand this. It's very important. You always want to look at, but more importantly, you want to look at growth over the years. You want to get a quick look. And this website is a great. Coifin. You can see at a glance over the years. And there's a chart tell you, oh, what are they doing? What are they doing? How they've been doing? Look at the cash. Oh. Total cash, it's pretty good. Receivable, wow. Over the years, that's why Amazon, people keep buying, even bad news. Now people are buying it because it has the ability to make money, and it pretty much corners a big percentage of the internet market. Yesterday, that was a big piece that I read across about Amazon and antitrust by the FTC, Federal Trade Commission, and they're going to bring a lawsuit against that for antitrust because Amazon grows so big, and Amazon have been keep operating on with that in mind, that how to navigate around antitrust over all these years. That's what is really good at it actually. Besides corner the internet market, destroy all the local and mom and pop store. In that sense, yeah. So it is coming, and at first I was thinking, oh, should I just neutralize my Amazon holding in my indexes? I can just short some Amazon. Depends on the index I'm owning, how many shares I actually own, and I can short. But this is too early to tell in actuality. It's way too early to tell, right? Because just prediction. I don't want to trade on prediction. I want to trade on empirical base projection database, right? Actual fact. That give me a lot more solid ground to stand on. Right? So right now I can take a quick look using this wonderful website called Fundamentaal. And yeah, I just discovered this website, and I don't get sponsored or paid by them, but at a glance I can look at the chart and look at the asset. I can look at all these other stuff. Look at cash flow, right? Obviously. Okay, right. And you can look on the left side, the little graph. Wow, look at that. Look at the income. Right. Right. But here's the catch. You see the little red bar? Yeah. What happened? Right. Yeah. The net income in actuality, it has been pretty. Oh, until the recent years, 2016, you can see, it was pretty stayed very minimal because it had very high capital expenditures, extremely high. Basically, it was losing money all of these years in actuality. Okay, so cash from operation, you can see, but its cash is actually raking in, but its expenditure is very high too. Look at the capital expenditures. Right, yeah. Spend a lot of money not only capturing market, discovering market, and inventing new business model in that sense. That's why now FTC is going to bring antitrust to it. Yeah. So understand that at a glance. This is very important because in the back of my mind, I'm looking for trend and I'm looking for a long-term trend behind, which is the wind behind my back. If I see something like this, do you want to short a stock like this? Unless there's some fundamental reason that is changing. Otherwise, you want to hold the stock. Yeah, so this is a way to give you a little boost. It could be a 10%, 20%, 50% boost. It depends, but it's a booster, it's a bonus. And I always want to have fundamentals behind the technicals. I understand, and I always connect the two together. Understand what and why the stock is doing this. What are the reasons? Yeah. Okay. So get back to the morning news. Okay, so let's see. Pre-market biggest move: Apple, Westrock, McDonald, and more. Okay, so Apple fell more than 2.6%. Reported China's planning to extend a ban in iPhone. Whoa, to use stay on this trade war, this U.S. China thing is out getting intense. So it is what it is. Right. Okay, so let's go on. They busted 3%, yeah, gain 1% on McDonald. So AI stock operating loss of 20 million to 40 million minus for expected loss. Plunge 9.2% in after C3.Ai forecast larger than expected operating losses. Okay. So let's take a look. I think it's C3. I know I have it in my list. It can't be AI. Oh, there we go. Yeah. Let's take a look. So this has been on the ramp this year, pretty much. Where it's coming from? This stock, literally after IPO, and it just keep on IPO. Wow, this guy IPO and spike up to 180, and then now it dropped all the way back down. Even this year was an AI year. They enjoyed this year still. That's why the IPO game. Okay, so that was a trend sideways, up sideways, but it go through this drop, hit 200 moving days. 200 moving days average is always an important technical point. A lot of institutional buyers, investors look at 200 days moving average as a point that if I'm bullish, this is where I want to grab as much as I could. Because if I have a fundamental bullish, just like NEO, in those China EV stock. This is the point where I want to grab as much as I could in actuality. Yeah. Okay. And then, this one, because of the market behind it, because this year, a lot of money going to AI. I mean, half of this year's market gain, 2023, is AI related. You got this, but then people realize, oh, it's overbought, so let's go back to the previous peak, right here. This is right here, right? This area, this box, and I drew this box as this is where it bounced off. Right? Resistance becomes support, very clear. Right? These two are resistant before. Doji stock collapsed right back. This guy is very volatile. This guy people sold right into it. So now it's right at this level at the box again. And today's bad news, gap it right through to the next level. Yeah. So the play will be around 200 moving days average again. Actually, this guy have room to come down, come off more. Yeah. Roku. 1% gain, 60.2. Yeah, so to recapture, we talk about a little bit about fundamentals, looking at cash flow, looking at total asset, total liability, that is these 101 stuff, and reflect that back into Amazon. Also, we look at the morning movers and C3.Ai. And where the technical points are on C3.Ai. So this guy, 200-day moving average. Okay, so since we're on that 200-day moving average, let's look at NEO again. It's playing at this level. So this is surprising. So if anything, I'm gonna roll. Is that I will roll my cash secure put on this guy. Yeah. Total expiration. So we still have 2 weeks. We'll see how that goes, and I get to roll and open more, continuing this trade. Lee's still working out, so I'm not worried about this guy. I'm gonna capture the PM. This guy, if they get exercise, I will roll. I'll open another puts 4 to 6 weeks ahead at a time, and see how that goes. Yeah, that is working out too, in a sense. Okay, that's about it for this morning. So, and this stuff is so fun. The market is pieces of puzzle scattered everywhere. And you see these news and information. It's up to you to process this and to use the information to your advantage, to put an edge for yourself. And everybody will see things a little differently too. And they will find their own edge. And it takes time to develop, but over time you build this up, and it's actually quite fun. It's quite fun to figure things out. That's human nature in that sense. Keep your mind sharp. What better than using information and then you gain additional benefit from it. And that's the stock market, using that information to analyze the stock, technical analysis, fundamental analysis, and then use that information. And if it's a good trade, guess what? Then money will come. This is how it works. I don't think about making money. I think about making good trades. I think about doing good information processing and putting an edge on my trades. And then money will follow naturally. Yeah. You cannot say, I want to make this much money. I need to make this money. It doesn't work that way. It's the other way around, is that you make good analysis, you make good trade, right? Follow through with your plans, and when everything lines up, money just follow. I have my long-term investment, my medium-term investments, short-term investment on top. I have my these option trades to trade around. In actuality, my long-term investment thesis, and that fluctuates all the time too. That change monthly, quarterly, yearly, all these things. And you have to be on top. And it doesn't take much time. Look at I'd spend 10-15 minutes a day, take a look at the market, do some analysis, and see if there's a good play. Right. And since it's inside day, that's why I'm not even really looking over the stock list. Because nothing really dramatic. It's still everything is inside bar, appears big bar. So waiting for the market to make a move and tell me what they want to do. Well, the Dow came off, so it's came off a little. Spider came off a little, right? But the market movers, they just kind of like dead in the water, sideways. Wow, these guys are getting really heavy. Look at all these tails. It's just gonna come off. It's telling you, oh, it's heavy. FXI, Baba, Tencent, they're heavy. They're rounding the top. Wow, things like Meta, Google, Apple, they're kind of rounding too. But yeah, so probably talk of the day is Apple took a little hit because of the news. So next level is over here. Yeah, but I have no play in it. I don't see anything yet. So I have to wait. Have to see. Okay. Anyway, so keep it short and precise. That's it for today. If anything, find anything of interest, I'll upload more today. If not, I will see everybody next time. Thanks for watching.